Hello, and thank you so much for joining in. Today, we are going to be looking at debt consolidation loans. My name is Kevin Orchard. I am the lead broker and director here at Orchard Lending, based out of Sydney, Australia. And the idea of today's session is to just assist you in almost guaranteeing success when you're looking at refinancing your current debt facilities. So firstly, just what is debt consolidation? So when I'm talking to clients about debt consolidation, I like to think more than just, we're just going to save you money, or this is some short-term solution, or it's just, something to get you out of trouble today. No, for us, it's the efficient restructure of chosen debt facilities to maximize your current and future needs and objectives. And I want you to really think about that when you are thinking of debt consolidation. It is realistically that. It is about maximizing the benefits for today and for tomorrow. And it's got to be chosen debt facilities. It may not make sense to restructure everything. We certainly don't need to or have to if it's not warranted. And to really get a proper insight into where you are at the moment, what caused you to get here, and how we can set you up for a better today and a better tomorrow. So why refinance at all? Some of these may seem obvious, but let's just run through them anyway. We want to combine many payments into one. You might have 4, 5, 6, maybe even more debt facilities, lots of money coming here, there, and there. And we just want to sort of, bring that back into the most common sense amount of debt facilities for you. As I said before, it doesn't mean we're going to refinance, everything or all of them. We're going to look individually, analyze each facility you have and see which ones are going to maximize the benefits for today and for tomorrow. Put them in. So it's got to be convenient and practical. And we definitely look at the convenience and practicality to you for refinancing, because there is some work involved. Analyzing your current finances, and you need to provide some paperwork yourself. And even for our first session, it's a very basic session. We normally don't need any documents, but the more information, the better. And to get a better idea of just where you are and what you want to do, there is going to be a little bit of inconvenience in the short term for hopefully a longer term benefit. Hopefully, debt consolidation will also save you on fees. You probably have some monthly fees, some transaction fees, maybe some account keeping fees, especially got these multiple debt facilities. So the idea is that bringing it back into one. Most of our lenders don't charge any monthly or account keeping fees or transaction fees, but again, it depends on the lender, depends on your situation. So either way, we want to try and minimize or even remove all monthly account transaction fees. So the maximum amount of your payments is going off that principle. Reduced chance of missed payments, of course, obvious one. You've got there's so many facilities, so much is going on, bang, bang, bang. Throw in a public holiday, throw in your birthday, throw in your holiday, and you might forget to make a few payments, and that can affect your credit history. So the idea to bring it back into one manageable payment. Again, though, as many as possible. It may not make sense to restructure all of your debt, but at least the most common ones, bring it back into one, make it easier for you to manage. And lower interest, reduce the term, and do a lower repayments. Now, these can be inclusive and exclusive. You may actually not be so worried about the interest rate or the interest paid over the life of the loan. You want to lower your monthly repayments now, which will increase the term. Counterwise, you might also have a 5 or 6 year debt facility when you add up all your average debt maturities and go, well, I actually want to pay these off in 3. And you just want to, although you could do it through your current facility, you want to bring it back into one to do it. So these sort of little levers, these bits and pieces, it's not simply going, I want to save money, because you might increase your loan term, which is going to save you money in your monthly budget, but will make you pay interest over the longer term. And these are the things we go over when we do look at your initial consultation, and before we do anywhere near any formal application, to make sure it's going to benefit, look at your current needs, your future needs. And out of those 3, do you want a low interest? Do you want to reduce terms? Do you want lower repayments? Just what do you need, and what's going to be the best facility for you? Now, there's always danger to the refinancing, and these are the things as a broker I look at when I'm chatting to clients. I just want to ensure, one, that we're not just encouraging further debt. What I mean by that is that we got all these facilities, we bring it back into one, maybe we increase the loan term, and you're like, great, I got this extra money each month, I'm going to go and get more debt. We don't want to encourage that. We want to make sure that what we're doing is putting you onto a path to financial freedom. It can also increase the interest paid, especially if you're increasing the loan term. Maybe the interest rate that you're paying averaged across your debts is going to be less. With the new facility, by increasing the loan term, could actually increase the total interest paid over the lifetime of the loan, plus on top of what you've already paid at the moment, right? We don't want to continue the debt cycle, this idea of just debt binging and keep on moving and recycling debt. We want to make sure that by just, consolidating these debts, we are putting you on that path and of freedom, and it's going to help you meet those today and tomorrow needs much more effectively. And that's why it's not just a debt final solution. It is just a path and a stepway to that point. And as I said, interest could be higher than some of the current debts you're paying. So the generally debt consolidation, we want to get you as best a rate as possible, but some debts you have at the moment may actually already be at a good rate, and refinancing doesn't mean that we could get a better rate. Add it all together though, there are other benefits, and that's why we really need to look at your current and future needs and make sure that when we do refinance, it is something that is definitely going to help you today and help you tomorrow and just put you in a legitimately value-added benefit position. So, preparing to finance. This is a good little exercise you can do for yourself. Collate all your monthly income and expenses and be honest. Have a look at just where your money is going. It's a great little exercise to do for yourself. Look at your budget and see just already where can you save money, because you may not even need to refinance. Maybe there's other areas you can save money, that you can smash down your debts. So it's a good little exercise to do. If you can't be bothered, again, you can send things to us. We'll work it out for you. It's fine. Not do a full budget, but at least give you maybe a top 5 expenses. Lay out all your debt balances, monthly repayments. Also, the debt maturity can help that as well. So just look at just exactly where you are, how much you've got, get a bit of an understanding, because you might even find that, again, you may not even want to consolidate debt. You might find that, there's actually some with a low balance, some that are maturing soon. And once you knock them out, you maybe not feel that you're in such a position as you are at the moment. List all your assets, income, docs and IDs. This is something that we won't need for the initial consultation, but we will need down the track, so it doesn't hurt to have them handy and just to make sure you've got them on hand anyway. Discuss with a loan broker like us at orchardlending.com.au. As I said, we can do a lot of this for you, but there was already going to be a bit of work on your own end to get these together. Number 5, I think this in some way is the most important when I am chatting to someone about debt consolidation, and that is to think about your current and future needs. I really want to get that through, that, as I've said, and I'm going to harp on about it, probably sick of me saying it, but it's so true. It's not just a chance of going, wow, we're going to kick the can down the road and, we've sorted out debt problems by refinancing and consolidating, but you've still got the same, if not more debt. The terms have changed, the interest rates have changed, that's all great. How is this fitting into your current and future needs? Is it putting you in a better position? And if it's just buying the time, and that could be a perfectly, just reason, at least be honest and understand that. Now, how much can you save? We have got a great calculator on our website you can use. Basically, you can, say with this instance, we're looking at a $35,000 loan over 4 years. Now, there's some initial setup fees counted by, hopefully you're saving on monthly fees of all your current debt facilities. This example here, you're saving a bit over $7,500. That's going from an interest rate of 18% average down to 10. Now, obviously, we're almost halving it, so you're like, of course you're going to save a crap load. But I just want you to understand that over 4 years, going from a very, very, not bad, but average, because on personal finance, 18%, you've got credit cards, personal loans, they're all up there now. It's insane, but that's what it is. You even getting that down to 10 can save that much, but even just getting that to 12 or 13%, it's going to save you a fair bit. So the idea is that when you do add on a higher interest rate plus monthly fees, getting to something that's much more compatible to your lifestyle can definitely save you money and help you pay things off sooner as well. Now, to use that calculator is to pop on over to our website. As you can see at the top there, the big blue button, Refinance. That's our Refinance Center. Go in there. We've got our calculator for you to use. We've also got the contact us page, so obviously get in contact with us, and we've got some more calculators on the calculators page. So you can also work out things like how much can you potentially borrow, how long will it take you to pay off debt. There's a lot of cool and interesting things there. Or if you don't want to do any of that, just give us a call. And the best way to do that is through our complimentary credit consult. So the best way to arrange that, you can give us a call, Australia-wide, send me an email direct and I can book you in manually, or if you want to book in automatically, go to orchardlending.com.au/bookings, and then from there you can book online. It's completely complimentary. We need very little physical documentation if you need to get started. It really is an initial conversation to say who we are, how we can help you, and I just want to bring it all the way back. It is about maximizing the chance for your success, not just for today, but for tomorrow, putting you in a much better position. And that's not just some, ridiculous statement. It's exactly what we're trying to do here. So all the best. Look forward to helping you soon. Feel free to contact me on any of those details on the page, and I look forward to helping you soon.